Well, guys, I want to do something a little bit different today. The past couple of times that I've been on Trading Pub, some of you guys probably know me from the E-mini Trading Academy, which is what I've been trading quite a bit since 2001. And in 2007, I founded the E-mini Trading Academy, and we've blown up. We have tens of thousands of traders in over 40 countries, and so the past couple of times that I've been on Trading Pub, I've gone into a lot of depth into my rules-based strategy and talking about, our trade signal software for the E-mini futures markets. And given recent market conditions and just kind of the state of the trading education community, I wanted to bring this back to basics today and show you what's been working really, really well for us in 2013. As you guys know, the market has basically just been in a strong trend since the first trading day of the year. And let me just kind of put this into perspective. I have to share each application one by one, so just give me a second here. But if we take a look at the daily chart on the E-mini S&P, I'm just going to kind of put into perspective what I'm doing. That way you can see why I'm actually going to cover what I'm going to cover today. So back here on the first trading day of the year, 2nd of January, you'll notice that was basically the lowest price of the year, and we've been trending up the entire year, right? And if we scroll into the market from October and then now into the later part of November, you'll notice that we're basically squeezing. Volatility is pretty low right now. But the one thing that has been working very, very well for us recently is trading breakouts on low cap equities. And so that's what I'm going to show you today. I'm not here to sell you anything. I'm not here to talk about complicated software. I'm actually going to just give you the rules and the step-by-step way that you can actually trade stock breakouts. So my goal, again, is not to sell you anything here. I just want to give you some really good content. And it doesn't matter if you're brand new to trading or if you've been trading for a decade. I want you to be able to take this information and start making money with it tomorrow. So with that said, let's go ahead and jump right in. Here's the standard disclaimer. It says this is for education only. I'm not an advisor or anything like that. Trading is risky. You're probably going to lose money. There's no guarantees. So with that said, here's what we're going to cover today. Okay, I'm going to give you, again, my 60-minute stock trading blueprint, basically how to get in and out of the markets in the first hour or so a day. And I'm also going to talk a little bit about why I think you should forget about complicated trading systems and, red light, green light indicators. And I'm going to show you my stock criteria for the best stock type for independent traders. I'm sure there's some people in here, a firm or a fund that is managing, over $10 million. If that's you, this strategy probably is not for you. If you're trading with less than $1 million at any given time, then this strategy is liquid enough for you, and I think it'll work quite well. So I'm also, like I said, I'm going to show you my favorite, and to date, actually for 2013, out of my 5 trade setups for the stock market, this has been the most profitable this year. And I'm also going to talk about, kind of the intangibles of trading, just a little bit on trading psychology, and maybe try to bridge the gap between the technicals and the intangible mental side to kind of help you find a link there. So if you're not familiar with me, again, my name's Chris Dunn. I've been trading for a little over 12 years. And since 2007, I've been developing trading strategies. We actually have some people on staff, coders and traders that are constantly running and developing strategies. And again, I didn't want to go into anything too complicated today. I've talked about our rules-based trading strategies and the trade signals that we use for the E-mini markets. But what a lot of people don't know is I actually started trading stocks back in 2001 when I was in high school. And my motto, just so you know, is no ego, no BS. I'm a real straight shooter, and I just want to give you the realities of trading and show you what I think is working in today's market and maybe what's obsolete or not working anymore. I'm also a world adventure junkie. My wife down here, Nikki, and I spend about 6 to 9 months out of the year traveling the world, and I'm a big scuba dive junkie. And what I did last year, guys, I actually took my wife, Nikki, who has been helping me in the trading community. She's actually on the support team for the E-mini Academy side of things. And last year, I wanted to see if I could take somebody brand new to trading and teach them this stock strategy and see, if somebody who was brand new to trading could become successful. And so after about 9 months of really hard work, she actually became a consistent trader. So I'm really proud of that. It's just really cool to see my wife literally go from zero to consistent and very, very good in the live market in such a short period of time. And now she's actually started to help people. She does a daily watch list, and we also have a course. This is her first 90 days equity curve. After a bit of practice, once she started to get consistent, this is basically the way her trading started to look. You can see over the course of 130 something trades, she made multiple new equity highs, but she still has drawdowns. And right now she's actually still working on building her size and trading bigger and bigger position sizes. But the key thing here I want to point out is that trading really is just about consistency, right? It's not about smoke and mirror trading systems. It's not about hindsight trading. It's just about, implementing a simple and effective trading strategy and then executing well in the live market. And my goal, I guess, for this year and next year is just to help traders kind of get through a lot of the smoke and mirrors and really just stop the madness. You don't need complicated systems. And you don't have to follow gurus that will promise you riches overnight. In my opinion, very, very simple. And so that's what I'm going to cover today. Okay. I want to start by talking about just the 5 pillars of profitable trading. And this is in particular specific to stocks. So the first pillar is making sure that you're trading the right types of stocks. I talk to traders almost every day who are trading stocks that the odds are stacked greatly against them. They're trading stocks that are dominated by high frequency algorithms or, big money institutional traders that run stops. And I want to show you just a kind of a specific niche of the stock market that you can trade that I think is really good for both new and experienced traders, but especially newer traders, because, you don't have to worry so much about big money institutions bullying you and running stops and things like that. The second is having a strong technical analysis foundation. And I'll talk a little bit about that. I'm not going to go into indicators and, cherry pick trades and stuff like that. I'm actually going to show you real trades that we've taken over the past few trading days. And then after you have an idea of the stocks that you want to trade and you understand, basic technical analysis, then from that you want to develop actually trading strategy setups, right? Rules-based setups, so you can eliminate or at least reduce a lot of the subjectivity and discretion. And then number 4 is money and trade management, which I think is probably one of the most misunderstood parts of trading. And, I could talk about that I know this is a 24-hour trade-a-thon. I could talk about trade and money management for 24 hours straight, but I'm going to try to get through a lot of stuff really quickly here. So the 5th and kind of final thing is skill development and really developing a strong mindset. Trading on a simulator, looking at historical charts, and just talking about trading theory, as a lot of you guys know, is completely different than actually trading the live market, right? And so whenever I talk about trading psychology, I really hate cliches, and I don't want to just talk about theory. I want to talk about practical ways that you can really develop a strong mindset. That way, when you get into the live market and you start to have, sweaty palm syndrome, or if you start making trading decisions that aren't according to your trading plan, you know why, and you know how to quickly fix it. All right. So let's talk about, and if you don't have a pen or a pad of paper, something to take notes, I highly recommend doing that right here. I'm going to talk quick, and if you want me to repeat something, feel free just to throw it in the chat. I'll try to keep up with the chat log as best I can. And then when I'm done, we're going to go through a bunch of trade examples, and then feel free to just fire in whatever questions you have, and I'm sure we'll have plenty of time for that. Okay, so with that said, I think there's really 5 basic categories of stocks that you can trade. Okay, everything from the super competitive and the super liquid stocks like Google and Apple and Microsoft, stuff that trades tens and tens of millions of shares every day. And then all the way down to penny stocks, like the scam penny stocks that really aren't real companies. They're just being pumped by promoters, and then everything in between. And so my sweet spot for this specific strategy that I'm going to teach you today works really well in the medium to low competition arena and medium to low liquidity. And when I say medium to low liquidity, I'm trading stocks that are liquid, but I'm not looking to compete against the Googles and the Apples of the world that are dominated by high frequency algorithms and big money traders, right? I want to trade a market where there is less computer algorithms, right? And I mean, keep in mind, I'm an E-mini guy. That's what I've been doing for a long time. So I understand the highly competitive markets like, E-minis and Forex and, super liquid stocks. But for this specific strategy, we're just going to focus on stocks for competition and a little bit lower liquidity, right? I don't want to trade stuff that has massive spreads and goes dry for, days or weeks on end, but I don't want to try to compete with the highest liquidity stuff, okay? And the reason why is because the lower competition stocks, if you can pick them right, you're typically going to get bigger percentage moves, right? You're going to have larger trading ranges, and it's just going to be easier to trade. There's also less professional traders and more dumb or slow traders. And I'll show you what I mean by that on a chart. We want to trade stocks that have emotion behind them and that we know we're going to be on the other side of the mass herd mentality. Dan, yeah, I think they are recording this. So, and then I think it's also easier to trade than over-the-counter or pink sheet stocks. If you've ever tried to trade penny stocks, there's limitations like, finding shares to short if you want to actually short. You can also get stuck in trades, big spreads. There's a plethora of problems that come with that. So this is kind of my ideal stock for this in particular strategy. Okay, I'm looking somewhere in between $2 to $25 for the stock price. I'm looking for a minimum of 100,000 shares on average traded over the past couple of weeks. I'm also looking for a higher beta or average true range. So basically we want something that is in play, that's volatile. And I'm looking for clear chart patterns. So you can have a very liquid stock that has a big range, but when you drill down to say the 2-minute, maybe it's really thin intraday and you just have really spiky price action. I'm trying to stay away from stuff like that. And I love just trading NASDAQ stocks. I just find the fills to be better. And we want to trade something that is attractive to other traders. And just to give you kind of an example of this, and I have to switch back and forth here on my screen. Pull up TradeStation. Just to give you an example, these are a couple of trades that we've had over the past couple of days. This is a very typical stock for us. PRAN, we've traded the heck out of this thing over the past couple of months. We actually had 4 really nice long trades through the end of July and August, and then we had a couple of shorts as this thing was topping out. But I just want to show you kind of an example of the type of stock you're looking for this particular strategy. And after we talk about this step, then I'm going to go in and actually give you the rules for what the setup are and the entry signal and all that good stuff. But you can see this stock trades in between $3 to $6. So it's, again, really low price. On average, it trades about 500,000 shares a day. You can see it can spike up to a couple of million shares a day. So it's liquid. And again, if you're trading less than $1 million trading account, you're going to be able to get fills on this type of stock with no problem. But you can see, the stock has kind of gone sideways over the past 45 days or so, and it's just gotten really choppy, so we haven't been trading it. Another example, this was a trade from Friday. This was actually Nikki's most profitable trade to date, and I did a video on YouTube about this, but you can see MACK, M-A-C-K, had a great gap fill play. Is a $3 stock, averages about 1 million to 2 million shares a day. So this is why I'm showing you this, is just kind of our sweet spot, just so you know kind of the type of stocks that you're looking for. And what I'm going to do actually at the end of this, I'm going to give you guys my video series for that's going to go in a lot more depth into this. And then I'm going to pull a winner for somebody who I'm actually going to give the full course to and 30 days of mentoring that comes with our watch lists and all that good stuff. So again, I'll try to do that by the end of my talk today. And so let's go ahead and jump into the actual trade setup. And we'll come back and talk more about watch lists later, but I just want to give you the rules for what the trade setup actually is. Yeah, and Jerry, I'll come back and answer that after we go through the rules here. So the name of the trade setup is the daily consolidation breakout. And you don't need any fancy software to trade this. You don't need any proprietary indicators or signals. I think some of the best trading systems out there are the most simple. And yes, in my E-mini futures strategy, our signals have over 5,000 lines of code. It's been something we've been developing for 7 years. But when it comes to trading these smaller cap stocks, I think simple is better. And so I'm going to give you some criteria that you can take today and practice a little bit and go do some historical research and then literally start trading this tomorrow. Okay, so let's go ahead and dive right into the setup conditions. Okay, so we're using 2 time frames. We're using a daily chart and we're using a 2-minute chart. Okay, so the setup actually comes from the daily chart. And what I'm looking for here is a clear resistance level that's tested twice or more. So basically the more days, typically the stronger the breakout's going to be. And we want something that's rising with higher lows. So basically we're looking for a market that's multiple touches of resistance. And now if you've ever tried trading breakouts before, you know that in the stock market and really any market, there are a ton of fake out breakouts, right? Has anybody ever experienced that? Has anybody, maybe just throw a Y in the chat room if you've tried trading breakouts or a breakout strategy before and you find yourself just taking a ton of small losses because you get faked out or there's a lot of fake out breakouts. Okay, so a few of you. So what I'm going to do is with the entry criteria, I'm going to show you how to actually avoid fake out breakouts because they're all over the place. And most breakout strategies that I see really don't predefine the entry rules well enough to keep you away from a lot of the fake outs. Okay, so it's best if you have a stock that's testing 52-week or all-time highs, or if you're extremely oversold. So basically, you don't really want to trade anything that's mid-range, or if you are trading mid-range, look for massive risk to reward. I'm talking more than 3 or 4 to 1, because a lot of times when you have a stock that's mid-range, that's where you get a lot of those fake out breakouts. But this is really, when we look at the 2-minute chart, this is when we can really start to eliminate the fake outs and really increase the odds. Okay, so the entry criteria is, again, based on the 2-minute, and we're going to go through examples and step-by-step charts of this, but I just want to go through kind of the text first. So what you're looking for is an entry that's above the daily breakout point. Okay, so what we're really looking to do is correlate and enter on a 2-minute intraday break. Okay, so we're looking to correlate the daily breakout with an intraday breakout on the 2-minute. Okay, and if you don't get a fill above, then you can actually enter on a confirmed pullback after the breakout. Okay, so what we're looking for again is a confluence of resistance on the 2-minute intraday that lines up with a daily breakout. And when you have that intraday breakout, you have that multiple time frame confluence where they're both breaking at the same time. What you're doing is you're attracting swing traders and longer term traders. You're also attracting momentum and shorter term traders. And so the breakout usually holds, and you're usually able to get a lower risk entry if you're pretty precise with it. All right. And so here's an example. This is neon, and you'll notice I have the top, and then I have the 2-minute chart on the bottom. And one thing you'll notice is we had a very, very clean resistance level that went back for a couple months, but in particular the past 2 trading weeks was squeezing right up against this $6 mark. So instead of anticipating a breakout, instead of trying to buy on a dip below 6, what you're typically looking for is a confirmed breakout, right? It increases the odds dramatically. And so one thing you'll notice is here on the intraday chart, so this is the 2-minute, after market open right here, you'll notice the market squeezed up into 6, and on the 2-minute chart, we put in very, very clean resistance, right? So all of a sudden, what you have is you have a market that's trading with volume, right? So as we started to squeeze into 6, we noticed that there was actually higher than average volume squeezing into this resistance level. We also had a low risk entry because of the fact that the market was squeezing up on the 2-minute chart. So on this breakout bar where you see the volume, this is the entry signal. It's very, very simple. And your risk goes behind the last prior pivot low. So you're risking about 7 cents for a breakout that's equal to 1.5 times the ATR. Okay, you say that one more time. Your risk is based on the prior pivot low. So you can see this prior pivot low right here, which is about 5 to 7 cents. And then the breakout target is based on 1.5 times the ATR, or the average true range. Okay. Oh yeah, good question, HH. So the moving average that we use here is just a 13-period EMA, so a 13-period exponential moving average on both the 2-minute and the daily. Mike, so the typical holding period is anywhere from 60 to 90 minutes. Okay, this is a trade that typically sets up in the first hour of the day. I'm going to show you examples where it triggers throughout the entire day, but over 80% of these trades actually trigger within the first 30 minutes of the day. So we're typically in and out before lunch. Here's another example on ITMN. You can see this is a mid-range stock, only trades at about $10 to $11. Trades an average of about 500,000 to 1 million shares a day. So good liquidity, but not too liquid to where it's going to attract the big money algorithms, right? And then, so you'll notice right here around 1050 or so was the daily consolidation breakout, rising lows, squeezing into resistance. So you never know when the market's going to break out, or if it's just going to double top and then fail out and trap a whole bunch of anticipatory longs, right? So the way that you actually increase the odds even more is by using your 2-minute. So when the market gaps up a little bit and you go, okay, the market actually opened above the breakout level, let me see if I can get a lower risk, higher reward entry. Market puts in intraday resistance here at about 1080, pulls back, gives you your intraday break. So you're looking for a run, retracement, you're looking for the market to hold up and then give you an intraday breakout on the 2-minute. And what you never want to do, this is where people get in trouble, is they chase breakouts out of the gate. Okay, this is where a lot of fake outs actually come into play, is where you'll have a clean resistance level, the market will gap up with market open, run up real fast, and then just slam down. So we call that a gapping crap, right? And most of the fake out breakouts look something like that, where it gaps up, you have a whole lot of people who notice the gap off a market open, they just throw in market orders with huge risk, and then it comes down and they wonder why they continue out. ITMN. Yeah, thanks, Z. So your risk, again, is to the prior pivot low. So I don't have the scaling on, but it looks like about 1070. So you're risking about 10 cents for a potential reward of 1.5 times the ATR. Okay, now that's the simple management. I don't always just take profit right at the ATR. That's where the initial risk to reward is set from. So if you don't have a really favorable risk to reward initially, then don't take the trade. It's that simple. I look for at least 2 to 1 or 3 to 1. Now, of course, you don't always get that. Sometimes you end up with a break even or a 1 to 1, and sometimes these breakouts go for many multiples of the ATR. Jerry, ATR is the average true range. Okay, so that's the average range that this stock has been trading over the past couple of weeks. Okay, so if this stock trades, say, 50 cents on average in a day, then what you're looking for is a target of about 75 cents. Okay, and so if you're risking, say, 10 or 15 cents for a target of 75 cents, that's an extremely good risk to reward. And then if you can use a confluence of multiple time frames to increase the odds, what you're doing is you're increasing the probability and you're increasing the reward to risk ratio, right? And I typically use a 14 period. So basically looking over the past 14 trading days. And so, yeah, we'll actually get into my screeners and scanners and stuff here in a second, how we actually find these. But here's another example. You can see we have multi-month resistance here at 420 on AMD. So this one actually trades. It's very, very liquid. So I wanted to show you a higher liquidity one, and these do work on the higher liquidity stocks. But again, you want to just make sure that you're trading something where you're sized correctly, right? You don't want to trade higher liquidity stuff and then not be properly capitalized. So gap up, right? You don't want to buy off the open. You wait for the market and then break that intraday 2-minute, and then all of a sudden you're risking 7 cents for 20. So here's just some general tips, and then I'll show you some trades from the past few days. The closer the stock opens to the breakout price, the better. You don't want to chase gaps that open more than 5% above the level. If you're chasing big gaps, you're increasing your risk exponentially. You can usually take these setups with little initial risk if you're precise. If you're precise on the 2-minute and you're getting in right at that intraday breakout, you can really manage your risk a lot better than, say, just throwing in a random order as the breakout is developing, right? Precision and speed is really what trading is all about, especially in the post, 2008 trading algorithm era, right? Seems like every week there's a new trading system coming out, and we know that over half of the trading volume in the major markets is traded by algorithms, right? So to be able to compete in today's market, even if you're trading low cap stocks, you need to have speed and you need to be very precise. And then be prepared to let price retest the breakout point. Really hold fast on your stop level, because what will happen 9 out of 10 times on a breakout is when it breaks, it will shake weak longs out. So it'll pop and then it'll pull back, right? So for example, here on ITMN, say you buy the breakout and then you see it start to fade back below that breakout level. What's happening here is the market is actually shaking out weak longs, because some people will say, okay, just buy the breakout and then put your stop behind the breakout level. If you do that, your odds, your winning percentage will go down in the 20s to 30s. We actually tested this. So it's really important that you keep your stop behind that prior pivot low until you get a really confirmed breakout to where it starts to run for your profit target. Yeah, so Jim, to answer your question, what's the rule to move up the stop? Once you have a confirmed breakout and it moves away from the breakout area towards the target, then you can actually adjust your stop behind the last prior pivot low. So once you get this big green bar and it makes a higher pivot high, then you can pull your stop behind the EMA here and then just let it trail up to 11, right? And then basically just trail each confirmed pivot low after you make a pivot high. So it's a pretty basic risk management strategy that I'm sure quite a few people are familiar with. But again, it's just about looking at where the market should not go. And then let me actually go over, because it's always easy to look at historical charts, but I just want to show you some real trades that we actually took over the past couple of trading days. Yeah, Jim. I mean, you can scale in. I'll actually show you Here, let's take a look at DEPO. This is one from the 21st. So yeah, this was Thursday. You can see we had really clean resistance here at, call it 805, $8. This thing trades on average about 500,000 shares a day. So it's right in our sweet spot. And this one was actually an all-in scale out. So you'll notice the market opened, it ran up, pulled back, and then boom, here's the intraday breakout. So there's your intraday resistance here at 803, which lines up with that daily breakout, right? And so on this bar, you'll notice we got in at, I think you guys should be able to see this little blue arrow here. The fill was at 805, so we're literally, 2 cents off of the breakout level, right? So from a management standpoint, we're risking about 7 to 8 cents for possibly 20 cents. And you never know how much you're going to get out of the breakout. But the idea is just to predefine your target and then let the price action tell you when to cover, right? So you can see we scaled out at 3 different levels. Mac, this was actually, this was Nikki's most profitable trade to date. I'm so proud of her. She's come so far in the year that she's been trading. And one thing you'll notice here, this was actually a gap play. So we had, this is an example of a stock that was severely beaten down over the past couple of months. You can see it's come from $7 all the way down to 2. And then we had a really nice reversal here where we had clean resistance at $3 and we had a gap fill up around 330. So we had a profit target of about 30 cents. Okay, so an initial profit target of 30 cents, risking about 5 cents, right? So risking 5 cents to make maybe 20 to 30 cents, really, really great risk to reward, right? And so what happened was, you'll notice the market opened up. We knew the daily breakout was right here at $3. So the market opens, pulls back, gives us an intraday breakout here on this 2-minute. And let me blow this up so you can see it a little better. So again, this was market open, market pulls back, ramps up, shows us that resistance at 3 that correlates with the daily breakout level, and boom, we get a fill. So this was another example of an all-in scale out. And I have a video on YouTube where I go through this, but we basically pulled the trigger on the full position size, scaled out 40% here, 10% here, and then the final 50% here. So, we don't always pick the highs and lows of the day, but look with this precision, how you can get in at almost the low of the day, and then by predefining targets, you can really be precise with where the market is anticipated to pivot from, right? And again, this one's really, really pretty. It doesn't always look that great, but let me just show you a couple more examples. This one was from earlier in November. This is Argin, and I wanted to show this one just because of the 2-minute as well. If you look at the daily breakout here, which is right around 1150, right? So you can see clean daily resistance at 1150. If we blow up the 2-minute, okay, what happens? The market opens, it crashes. So if you just buy off of open, if you just throw a market order off of open, you'd probably panic on this 2-minute little crash, right? But if you notice that the market ramps back up, has that intraday resistance, intraday breakout, where it crashes and then recovers above the daily breakout level, look again how we got in just 2 or 3 cents off of that daily breakout. And then this one actually went parabolic, so they don't always shoot to the moon that quickly. And when they do, we just cover all at the first target. Because the odds say whenever a stock goes parabolic like this, it's going to get a crash. Mark, will this work if you're trading options instead of stocks? Yeah, I mean, you can trade options on it. I just, for this particular strategy, we're trading lower cap stocks, and I just prefer equities. Digit, good question. How do you predefine targets, percentages, or ranges? So it's based on targets based on 2 things. Number one is the ATR. right? And again, this is how we predefine targets. This doesn't mean we always take our profits at a measured move or an ATR. This is just what we use whenever we get in a trade. So the ATR, or the average true range, and then the second is fib extensions. So we'll actually run Fibonacci extensions on both the daily and the 2-minute, just looking for measured moves. And if you guys are familiar with my E-mini trading strategies, you know I'm a big fan of fib extensions. I think they're really great for making predictions of market moves. All right, let's move on to this example. And here's an example, guys, of a breakout. And this is why I'm not a fan of holding overnight. You get a lot of, you'll notice right here on this daily chart, this is ETFC, basically E-Trade, right? So we actually traded E-Trade. We had a clean breakout of 1775, but look at the lack of follow through. Notice how over the next few days and weeks, it just kind of floundered out. This is why I'm just a big fan of getting in and out of the markets and basically trading momentum. Again, here's your intraday 2-minute, pops, recovers, quick little pivot to pivot move. So this was only good for about 20 cents. And then we actually scaled back in for an afternoon trade. So there was actually 2 trades, but the main trade was here in the morning, right? We were in and out within the first 45 minutes of the day. And then we actually had a longer term trade right around late morning that we let kind of play out through the whole day. All right. So that's another example. One more BRCD had a beautiful, beautiful breakout here. And again, I just precision on the 2-minute. Opens, crashes, intraday break. This one we actually scaled in 4 different times just because of the price action, and then covered into a test of the prior high a day. But it's really, the biggest point here is just using a confluence of the 2-minute and the daily to be precise. And if you do that, that will really increase the winning percentage as opposed to just looking at a daily and trying to anticipate breakouts. All right. So one thing I just want to kind of cover briefly is the intangibles of trading. The biggest hurdles that I think to becoming a profitable trader, there's really 3. Number 1 is not having an objective trading strategy. And I know I got to switch this PowerPoint over. There we go. So again, I'm going to go over kind of the 3 biggest hurdles to becoming a profitable trader. Number 1 is not having an objective trading strategy. Something with clear rules for setups, entries, and management. You're trying to use complicated indicators, or if you have too much data on your screen, you're going to get overloaded. And if you're making subjective or discretionary decisions without really clear set rules, you're going to find a lot of inconsistency in your thinking, which is obviously going to translate to inconsistency in your pocketbook, right? Number 2 is not taking the time to develop the skill set of anticipating the hard right edge. And I think this is probably one of the most undervalued skills in trading, is really looking at the hard right edge, because it's really easy to go back in hindsight and look at trade setups and say, oh yeah, look, this was a great trade and this was a great trade. But the game completely changes when you get in the live market, right? And so one thing that I talk about in my course and in our trading room every day is really bridging that gap between kind of knowing what to do and getting yourself to do it. And the single most effective way I've found to do that with new or experienced traders is just basically screen time and bar by bar practice. Going back, finding 50 or 100 trade setups and going bar by bar and saying, how would I have traded this? Either doing that manually or using market replay on NinjaTrader. There's just so many great tools out but I think it's really important to take time to develop that skill. And then the third thing is emotionally chasing price, hesitating on entries, or closing prior to profit targets. Now, I actually surveyed about 15,000 traders, and I asked, what are the two biggest problems that you have in your trading? And the things that consistently come up are hesitating on entries, basically not knowing when to pull the trigger, and then number two, closing prior to their profit targets. And I think the reason for that is because of a lack of confidence, either a lack of confidence in your strategy or a lack of confidence in your own ability to execute your strategy, right? So I would just encourage you, if you don't have an objective trading strategy, really try to hammer down what that looks like for you. Again, it doesn't have to be complicated. You don't need 1,000 indicators on your screen. Simple is better, less is more. Number two, put in the time, put in the screen time to develop that skill of thinking like a chess player, anticipating 2 or 3 steps out ahead of where you are now. And then number three, really develop confidence in yourself and your strategy so you get away from chasing and hesitating and closing prior to profit targets. Okay, so with that said, I know we've got about 15 minutes left, I believe, and what I want to do, I'm going to give you my more detail on the 60-minute stock breakout trading strategy, and before I wrap it up today, I'm actually going to pick a winner that I'm going to give my free mentoring club to. You're going to get the full strategy with all 5 trade setups that we use, and also 30 days of watch lists and mentoring from me and Nikki. So go ahead and go to traderformula.com/pub and just opt in to get that free breakout trading strategy. And then what I'll do is one of you guys that opts in for that, I'm going to pick one of you to actually win the full course and 30 days of mentoring. All right, so and then for the rest of the 15 minutes, I'm going to do Q&A, and I'm also going to circle back and show you how we actually build our watch list. Nikki spends about 90 minutes a day actually doing our watch list for our students. She goes through hundreds and hundreds of stocks, and we have a few custom scanners that we run in TradeStation to find the highest probability or the stocks that have the highest likelihood of a breakout the next day. Uh-oh, you got an error? Oh, we might have actually flooded the server. It was working all day and then it just crashed. All right, give it a minute here, guys. I'm sure it'll be back on soon. We have a pretty big server too, so let's see if I can get that to pull up. Yeah, if it's not working, just give it a second, and it just reloaded for me. So you should see this screen. Yeah, I have my programmer calls me at least once a week. He goes, Chris, are you in a webinar or something? The server just crashed. So yeah, if that doesn't work right away, just give it a second. I know we've got probably 500 or 600 people trying to hit it all at the same time. So yeah, there's the link. It's just traderformula.com/pub. And okay, so let's go ahead and backtrack. I just want to talk for about 2 or 3 minutes about watch lists and actually how to find the best stocks to trade. We talked about the criteria that you want to use. We talked about the setup. Now let's talk about how to find the stocks. All right. So it's important to have a list of high profit potential stocks that could develop the next day. And you want to have a game plan of action for each stock on watch. So typically, and today was a little bit lower because it's a holiday week, but on average, we have anywhere in between 10 to 20 stocks that we're watching. And the way that we do that is, number one is we do scanning. So we browse through stocks that fit specific criteria. And one thing that we use is actually FinViz. I'll give you that website. It's just finviz.com. And we look at the 5% gainers and losers, also new highs and lows that meet technical patterns. And through there, we pick out basically the low-hanging fruit. We say, okay, which ones, according to volume and according to the patterns, look like they have the highest probability to pop the next day. We also run some custom scans through TradeStation, and we have a list of common tickers that we know are in play right now, right? For those of you that have been trading stocks, recently solars have been hot. 3D companies have been really fun to trade. There's been a lot happening with biotech companies. So we're constantly looking at the different niches and basically pulling out stocks that we know are in play. And then as soon as we have a pattern develop, it goes on the short list, and we look for a signal and a valid setup and then trade it. Is that site back up, guys? Is that working for you? Just check it one more time. Okay. Yeah, sorry, guys. I don't know what to do. We have one of the best servers out there, and I guess when you have so many people hit it at once, it just crashes. Okay, so that's step number one. Step number two is hunting. So after we do our scanning, basically what Nikki will do is go through a list of 200 to 300 stocks that we've traded in the past, and just basically look for stocks that are coming into play. The goal here is to discover stocks before the mass amount of traders do. You want to be early to the game, but you don't want to be so early that you're trading stocks that aren't attractive to other traders. And what Nikki does is she actually hunts for patterns and then sets alerts. And if you follow her on Twitter, it's just Fit Trader Chick. She actually gives live alerts that are actually really good. People charge hundreds of dollars for basically what she's giving away for free. And so, yeah, again, in about 10 minutes, guys, I'll go ahead and pull a name, and somebody will get the full course along with 30 days of Nikki's watch lists and mentoring. Yeah, it's just twitter.com/fittrader. I think I typed that right. Yeah, that's Nikki. I'm Chris Dunn TV on there. Yep, so that's basically it, guys. Just again to kind of review, the most important 5 pillars of profitable stock trading are: number one, making sure you're trading the right types of stocks. Stay away from stuff that's dominated by algorithms. And if you want to trade the Googles and the Apples of the world, more power to you. But if you're frustrated with, getting stopped out all the time and getting whipsawed, and you just want a simple strategy, I recommend giving this a shot. It's very simple. You can implement it in a day. And if you have questions, I love talking to traders. Just shoot me an email at chris@chrisdunn.com. Just put it in the room there. Number two, have a strong TA foundation. Basically, know basic indicators. Keep it simple. Have a few income strategy setups. Personally, I have 5, and I taught you my most profitable one so far this year for free. So I hope that was some value for you. And also talked a little bit about money and trade management. And then the final thing is skill development and having a strong mindset. And when I say a strong mindset, I mean really having the goal to hold through pullbacks. I see so many traders that get into a good trade and it starts to move against them a little bit, and they kind of freak out and jump out and then see it move in their favor. So it's really about developing confidence in yourself as a trader and your strategy. Yeah, so if the website is still moving a little slow, just try to hit refresh, and I'm sure that'll come up. But yeah, guys, we've got about 5 or 10 minutes here for questions. Feel free to fire away. If I missed any questions, feel free to post it in there again, and I'll try to scroll up a little bit. But here's the link again. It's just traderformula.com/pub. Yeah, it's actually a video series and a download that you'll get over the course of a week. All right, let me scroll up and get to some of these questions here. You can automate fib extensions, but I find it much better just to look at the price action. It's a lot easier. Yeah, I have that part of the Trader Formula free video course, and I'll make sure to send you also a list of the brokers that we're using right now. You know, if you're using the Fidelities and the TD Ameritrades, you're probably leaving money on the table. But yeah, I'll tell you who I'm using as a broker, you know, how we run the scans and all that good stuff. Yeah, Sam, we do have some proprietary scans, and we actually give those to our students. Do you use market profile? Not really, George. You know, I like market profile. I understand it. I would rather keep my strategy simple. Um, you know, there's 101 different types of technical analysis, right? You've got Fibonacci, you've got momentum, you've got breakouts, you've got counter trend trading. This is just a specific, simple strategy that tends to work well and has worked really well this year. Um, and again, this isn't the only setup that I use. You know, we have a couple of short trades that we just love. But yeah, it's a great, especially in today's market. You know, with lower volatility and just kind of a slow grinding market to the upside, breakouts tend to work better. And if you increase your odds by using confluence of time frames, and if you really understand risk management, it's just going to work that much better for you. So over the past few months, Nikki's sitting around mid 60% range. Um, you know, so sometimes it's as high as 70s, sometimes it dips into the 40s. You know, but really win ratio is only one part of the equation, right? Profit factor is another huge thing. Nope, don't have scans for Thinkorswim. But yeah, I know the TOS platform has great scanners. Um, but yeah, we can teach you how to easily just find the best stocks. It's really not complicated. It just takes time. And that's why, you know, Nikki does that service for our students because it takes her about an hour and a half a day. But she loves doing it, and it keeps her really engaged with the markets and with our traders. So. Not for stock storage. I have trade signals for the E-mini markets. For anybody that came in late, you know, some of you guys probably know me from the E-mini Trading Academy, which we have some really robust trading strategies and signals for the futures markets. But I wanted to change it up today and just really give you guys something really powerful for free that you can implement very quickly. There's not a learning curve to this strategy. If you're trading the right types of stocks and if you know this, you know how to use the daily and the 2 minute together, you can trade this with confidence. Yeah, George, I have both rules-based and automated systems for the E-mini futures markets. Does she have a set risk amount and size her purchases accordingly? Yeah, Rita, that's a great question. So what she does is she manages risks, or she manages risk according to two things. Number one, the max loss that she's comfortable taking. You know, for example, as she's building size, when she first started trading, she was only really comfortable risking a couple $100 per trade. And as she's building that up, she's now increased that. And so she identifies what her max dollar amount loss is. And then we look at where the trade should not go, you know, looking at that prior pivot low that I talked about, and then size according to that. I think it's a mistake to look at a trade and go, okay, well, I want to risk 2% of my account or 2% of the position. You know, that's irrelevant. It's really based on where the stock should not go for the trade to be intact. You know, the technicals are way more important than your entry price because your entry price really is arbitrary, right? It doesn't matter to the market. The only person it matters to is you, right? All right, guys. Looks like we are coming up here on 3 o'clock Eastern. Let me go ahead and find a winner for the full course here. Let me spin my virtual wheel. And give me 1 second here, guys. I hope this was helpful. What do you guys think? Was this good stuff, or was I going too fast or too slow? You know, what do you guys think? Helpful? All right, awesome. Thanks for the feedback, guys. You know, and again, reach out to me, email, Twitter, Facebook. I love talking to traders. I'm in our trading room every day. All right, let me spin the wheel here. Drum roll. All right, Gamaliel Santana. Is there a Gamaliel? And forgive me if I'm butchering this. Gamaliel Santana, are you in the room? All right, there you go. Gamaliel, congratulations. I will shoot you an email with access to our mentoring club and the full course. Awesome. All right. Well, thank you guys so much. Morgan, thanks for having me. I love doing presentations for the trading club. You guys are awesome.